progress. Basically, this is out of the survey that we've conducted, and we've asked the students which are the chapters do you want me to cover, and they all come back and said, okay, these two chapters are the ones that is something that they want us to cover for the next exam. So thought, okay, let me give you an overall idea on these two chapters. You might be already knowing, so in GST, input tax credit is a quite big chapter. Okay, this is quite a big chapter, and I used to call this chapter as AAA. All my lectures, I used to call this chapter as AAA because it's very, very, very important chapter. Okay, so if you make an ABC analysis and say what is important, what is not very important, all that, this chapter alone will come under AAA category. And which are the sections that you will have to go through in this particular input tax credit chapter for the next exam. I'll also make my predictions on what kind of questions we can expect from these chapters and what precisely I would expect you to study for November exam. Also, I will cover whatever amendments we have in these two chapters. I'll cover in these sessions. Okay, and we will also see if we can solve any questions that we have. So I'm recommending that on the comment, if people have joined later, somebody can reshare those two notes. I've shared a chart note, which is what I'll go through for ITC chapter. And there is also a question bank that I've shared. So what you guys should do is after the session is over, please go through the question and answers and get a complete clarity on those areas what we are discussing in this particular chapter. Okay, so only with the promise that you will go through, spend another 30 minutes to 40 minutes after the session to study this chapter. Only with that commitment, we will go ahead and then do these classes. Okay, so like I said, this will be available in this channel. After this classes is over, I'm going to upload it in here. Okay, so input tax credit, what are the things that you have in this particular chapter to learn in CA Inter GST? So I would say the sections that are very relevant are these three: section 16, section 17, section 18. Section 16 overall is very important, and it talks about what are the conditions for availing ITC. Conditions for availing input tax credit. Section 17 talks about two things. One is apportionment of credit, and it talks about something called as blocked credit. And believe me, apportionment of credit is something that they don't want to test at your level. So for you, this is what becomes most important: blocked credit. Then section 18 talks about cases of availing or reversing the credit. Okay, so these are the three sections that are very important for you to cover in this particular chapter. In here, if you look at section 16, there's an amendment that we have for this exam. What has happened? There's a new clause introduced, which is applicable for November exam. The clauses section 16 subsection 2 clause AA. It is quite something that we have see. If you're, I'm pretty sure all of you guys would have been gone through GST at some point or the other. So this is nothing but an extension of some provision that was already there, nothing very new. Okay, if you remember, there was a rule called as rule 36(4), which was talking about how much credit a person can take when it is not reflected in their 2A or 2B, or when the supplier has not uploaded this particular invoice details in their GSTR1. So now they have made an amendment and say that they can take only when the credits are on. There was an extra 10% credit. At some point, it was 20%. Then they said 10% extra credit you can take. Then they said 5% extra credit you can take. Now they said there's no extra credit. If you want to take credit, that invoice has to be reflected in your 2A or 2B, or this has to be uploaded by the supplier in their GSTR1. So that's what is the changes happened in 16.2A. I will explain this also in detail because it's an amendment. There is a chance that there could be some questions on 16.2A. Okay. So this is what will be our broader coverage for today's discussion. Okay. So let's get started with, I hope you have the notes with you. So I'm just going to swap it up and right from one note to another. Okay. Okay. Now I'm going to start with the very basics, okay, for all the people to understand. See, somebody please reshare the notes link on the comment box. I hope somebody will do it for everyone. And someone please share the link for question bank also, and please make that you mark it somewhere, like after you share it, tell whether this is a question bank or the notes. Okay, so you guys can go through that. I will also walk you through the notes as and when I discuss these, so no worries on that. So you know that input tax credit is available when a supplier makes, I want you to look at the screen, and please understand that I have made it in a Zoom share so that you guys, if you're watching, and I don't know, some of you guys definitely will be watching in your mobile phone. Not everybody has actually a laptop. So my system setup allows you to zoom. Okay, so if you can just pinch and zoom, you can actually read what is there in the screen that I'm showing you. Okay, so you will be able to do that as well. Okay, so let's get started with no more introduction, no more, telling what to do. Let's get into this and then try to learn this today itself. ITC is not a difficult chapter. It's one of the easiest chapter, very logical, conceptual chapter. So all I require is your full concentration for the next 2.5 hours so that we can get this chapter done. Okay, so you know that when there is a supplier, okay, be it a factory, when they make an outward supply, they will have taxes collected from the customer, which they will have to pay to the government. Whenever, see, as a supplier who is liable to pay taxes generally under forward charge, he's having whenever he's making supply, he's supposed to collect and then pay. What is this amount called as? Generally in GST computation, this is called as what? This is called as outward tax liability. So whenever he makes an outward supply, or sometimes we call it as output supply, both are same. Okay, when you make an outward supply or an output supply, you will have outward tax liability. Now, should you pay whatever you are collecting from the customer? Should you pay that entire amount to the government, or can you take some deduction? The answer is yes, you can take some deduction. Because in a factory, you would have made lots of purchases. In GST, the purchases are called as inward supply. On these purchases, you would have paid some taxes. So the purchases in GST is classified into 3 categories. One is inputs, input services, and capital goods. So there's a definition for all of these to understand. So all your raw material that is being purchased, which are not capitalized, all the goods that are purchased and that is not capitalized, we'll call them as inputs. If you capitalize something that you purchase, like a machinery, like laptop for a service entity, whatever you capitalize, we call those inward supply as inward supply of capital goods. And any services you make an inward supply, We'll call that as inward supply of input service. Understanding? So you basically, the section 16, which talks about conditions for availing ITC, talks about inward supply of goods and service. When I say inward supply of goods and service, it includes three types of inward supply. One is inputs, then input services, and capital goods. Okay, so on all of these three, you would have paid some GST, which you can take it as input tax credit. And what would you do with this particular credit? You will set it off when you're paying your outward tax liability. This is the very basic concept of ITC chapter. Now, let's try to understand few conceptual clarity here. So the first question I have is this. Say, Britannia company. Britannia company purchases machines, okay, to manufacture your biscuits. So you can see big biscuit manufacturing machines. So you're purchasing machines for manufacturing biscuits. How many machines are you purchasing? You're purchasing 4 machines. How many? 4 machines. Out of that, 3 machines you are using in your business. 4th machine is called as a backup machine. 4th machine is called as a backup machine. Why are you putting this particular backup machine? Because if this particular, 3 machines, any one machine fails any day, what I'm going to do? I'm going to switch off the 4th machine. Right now, is this particular machine put to use? No. So the question is that, am I eligible to claim ITC on this purchase of, see, when I purchased 4 machines, I've even paid GST of 1 lakh on purchase of this 4th backup machine, which I've installed, but not switched on. So question to all of you is this, am I eligible to claim ITC on purchase of this 4th machine? What's your answer? Yes, you're eligible to claim ITC on purchase of this backup machine also. Now, how that concept comes in? Okay, so for that, you need to go and look at our notes. So the understanding is that section 16, condition for availing ITC, has 16 subsection 1, which says every, look at screen and then read what is that section 16.1 says. Every registered person paying tax on inward supply of goods and or service can claim ITC on the same if it is used or intended to be used in the course of furtherance of business. What it says, if you have a machine and you're using it or your intention is there to use, you can still take it as ITC. And they're saying intention to use in the course of furtherance of business. And business has an elaborate definition. They said anything you do in terms of trade, commerce, manufacture, everything is business. Anything you do incidental and ancillary to do it is also a business. So any purchases that you make, which is used or intended to be used in the course of furtherance of business, you can take the credit. So in our example question that we have, we understood that this particular machinery that we have is intended to be used in the business, or you can take the ITC of it. Okay, so a backup machine, ITC is allowed. So that's one learning that we have. Second, say the company called Nokia. Okay, we all know Nokia as a company, right? Nokia has spent 10 lakh rupees on research. How much? 10 lakh rupees on research. And that is being paid to an IIT based company to do research for Nokia. So whatever IPR that this company finds out after this research, so after doing the research, if they get some IPR, who will get the IPR of this particular research? Nokia will get it. So on behalf of Nokia, the research is conducted by this IIT-based alumni company. Now, every month, this IIT-based company is going to charge how much money from Nokia for doing this research? They're going to collect 10 lakh rupees plus GST. The question here is Nokia allowed to take ITC of the GST paid on research? Right now, whatever they have, right now, there is nothing found out from the research. So they're not using it in the business. So can they still take ITC on the taxes paid for taking research services? What's your answer? Yes. Again, you will have to look at the provision says what? The provision says it is used or intended to be used in the course of furtherance of business, which means there is a word called furtherance of business. So whenever you're using this word inside, when you're using this word inside your GST answers, you should use the word when you are actually having an inward supply. It can be of goods or service. You can take ITC when it is used or intended to be used in the course or furtherance of business. Your intention could be use it for the development of your business. So anything that you do for development of business is also part of your business. Thereby, you can take ITC. So these are the two understandings that you have to have from section 16.1. All right. Okay. Now, I have one more question that I have for you, okay, which is very important concept discussion. I'll put it across in an example for you. You have to give me an answer on this. XYZ Limited, which is a registered person. In July 2022, they made an inward supply. Okay, they made an inward supply for 10 lakh rupees. They paid, it was taxed under forward charge mechanism. So they paid money to the supplier, 10 lakh plus 1.8 lakh GST. Question number 1. Can this XYZ Limited take ITC of this 1.8 lakh? Yes. Because it's a tax paid under forward charge mechanism, it is used in the business, there is no problem, they take the ITC of it. So, in July, they have zero outward supply. There is no outward supply, only like they have taken in purchase, no sale that was made in July. So my question is that at the end of July, will they have net to GST payable or excess credit to be carried forward? They'll have excess credit of how much? 1,80,000, which they will carry forward to August. Right? Now, in August, they got a service from a GTA. A GTA which did not opt for a forward charge. What is the GTA? Goods Transportation Agency. So in August, they have taken service from a Goods Transportation Agency. And the value of the service, the freight charged, is 5 lakh. 5 lakh is the freight charged. Question number 1, when GTA is, here the supplier is a GTA. When GTA is providing services to XYZ Limited, first of all, is it taxable? Yes, it is taxable. Now, when will a GTA providing transportation services to someone will not be taxable? Is there any scenario where it will not be taxable? Okay, I'll leave that question. Okay, good. So some of you guys are answering. Very good. Now let me ask you one more question. Since it is taxable, what charge will be applicable on this? Will it be taxed under forward charge or reverse charge? It will be taxed under reverse charge. Why? Because XYZ Limited is a body corporate. When GTA is providing services to a body corporate, this body corporate is a specified person for paying taxes under reverse charge when they receive services from a GTA. So this body corporate is a specified person, thereby this tax is payable under reverse charge mechanism. The tax rate applicable for reverse charge mechanism when they receive services from a GTA is how much? It is 5%. So when it is 5 lakh, the value, and it is 5 lakh the value, how much is the GST payable under reverse charge by XYZ? It is 25,000. My question is very simple. I already have a credit of 1,80,000. Can I set off this 1,80,000 against this 25,000 payable in August? Assume there is no outward supply in August also. No outward supply in August as well. Can I do the set off of 1,80,000 against this 25,000? The answer is no. Why? Because tax payable under RCM cannot be paid by utilizing ITC. That needs to be paid by cash only. So if you look at, I'll show you the provision that we have there. This is being repeated multiple times in the exam. Note, tax payable under RCM cannot be paid by utilizing ITC. It needs to be paid by electronic cash ledger only, because it is their tax payable under RCM is nothing but what? It's a tax on inward supply. So when you're purchasing something, you cannot utilize ITC for paying that money. Okay, so you're just paying taxes under RCM. It's just tax paid on your purchases. So it needs to be paid by using cash only, which means you can only use cash ledger, which means you'll have to deposit money and then you utilize that. But at the end of, in the same question that I'm discussing here, at the end of August, okay, so this 25,000, is it payable? Yes, payable by cash. So my question is this, if that's the case, by end of August, what will be their credit? How much will be their credit? It will be 1,80,000 plus 25,000. 2,05,000. Why? Because The tax paid under RCM, can that also be allowed as ITC? Yes, that is also there, inward supply. So this service from GTA is also there, inward supply. That also can be taken as ITC. So 1,80,000 in August. 1st of August, I have opening credit plus 25,000 or credit that is available, which is paid under RCM. Total credit would be 2,05,000. This 2,05,000 of ITC can be utilized to set off outward tax liability. Understanding? Is it clear, everyone? Can I have a quick yes if this concept is clear? All right. Now let's go back. Okay. Now, so that is tested multiple times. Okay. There are a few questions that we can look at how that will impact when you're solving a question in GST. Now let's look at what is the next provision that we have to learn in ITC chapter. Section 16 subsection 2 talks about what are the conditions one needs to satisfy for taking ITC. There are 4 conditions. There were 4 conditions to be satisfied, and now we have a new section introduced, which act as the 5th conditions for availing ITC. Now let's go and understand the first 4 conditions. I will read the provision for you. You definitely have the notes. You can look at that as well. First one, he is in possession of a tax invoice, debit note, or other prescribed document. They are saying for any person to take ITC, they should be in possession. The word that they have used there is in possession. It's not like, the examination question would tell that, see, Mr. Ram had purchased certain product. He had the invoice, but he lost the invoice. So the invoice is missing. Say, can he take the ITC of it? If the invoice is missing, can he take the ITC of it? The answer is no. So in any question where invoice is missing, you say that you are not eligible for ITC. They'll give you, they purchased a machinery over 3 invoices. Total GST in 3 invoices is 3 lakh. In that 1 invoice is missing, for which GST was paid was 1 lakh. So how much ITC I can take? Only 2 lakh, because out of 3 lakh, 1 lakh worth invoice is not there. Only 2 lakh I can take ITC. With me? Okay. Now they have said tax invoice, it can be tax invoice, debit note, or other prescribed document. I've given you what are the documents they have prescribed for you to take ITC. So any of these documents are okay. Okay, I've listed 5 different documents in Rule 36. If you have any of these documents, you can take ITC. Number 1, tax invoice or revised tax invoice. Debit note. First of all, understand what is debit note. When will someone issue debit note? Have you heard of this document called debit note? Okay, so what is the first condition for going with a debit note? Say, who will issue debit note, supplier or recipient? Who will issue debit note? You can make a guess, guys, no problem. So there are 2 documents that you have to learn for you to go for the exam. 2 documents are very, very important. Okay, I'll make a quick note on documents also. Say, supplier, recipient. Okay. For a supplier, I've given an invoice for 1 lakh. Okay. And GST charged was 18,000. This was done on 1st January 2022. This was done on 1st January 2022. But supplier made a mistake. This should have been, this invoice should have been, this invoice should have been not for 1 lakh, it should have been for 2 lakh. Actual value is 2 lakh. Value in the invoice is 1 lakh. But invoice is already issued. They realized this on 31st March only. So what will the supplier do now? Supplier wants to get 2 lakh plus GST. What will the supplier do? What will the supplier do? Supplier will have to issue one more document. Can they issue one more invoice? No, invoice is already issued. Invoice can be issued when there is a supply. Now there is no supply. I just want to increase the value in the invoice. So I will issue a document called as, now I want to increase the value. So what document will I issue? I'll issue debit note. For how much? For 2 lakh or 1 lakh? For 1 lakh. So to increase, so the preface or the reason why we go to this document called as invoice, document called as debit note, is that invoice is already issued. If invoice is not yet issued, I can always correct the invoice, right? But invoice was already given. I've uploaded that in GST R1 also. Now I want to increase the value. I'll go with what document? I'll go with the document called as debit note. Now, the actual value, this is option 1. So which means now the recipient has got how many documents with them? There is an invoice for 1 lakh and there is a debit note for 1 lakh. On this, both they have paid GST. The GST paid on this invoice, can this recipient take ITC? Yes. The GST paid on this debit note, can this recipient take ITC? Yes. Okay. So for the supplier, there is no time limit for debit note as such, but the recipient for taking ITC, there is a time limit. That will act as a time limit. For taking ITC, there is a time limit. Okay. Now, when the supplier is issuing debit note, supplier will pay more taxes. So government don't have any problem. You issue debit note, and any debit note you issue, pay the taxes. But the recipient, the next year, you have a deadline before which you have to take ITC. Then, now the actual value supposed to be is only 80,000. Scenario number 2. How much was the invoice value? 1 lakh. Actual value is only 80,000. Now, do I want to increase the value or decrease the value? I want to decrease. So what document will the supplier issue to the recipient? It is credit note. Now, when the credit note is issued, whether supplier liability will increase, supplier liability to pay taxes will increase or decrease? It will decrease. So there is a time limit for issuing credit note itself. You can carefully listen. There's a time limit for issuing credit note. So the time limit that we have, time limit for issuing credit note or for credit note for supplier and claiming ITC on invoice or debit note for recipient is earlier of what and what date? 20th October next financial year, or date of filing annual return. This is the deadline before which they have to go and see. Look at this time limit for issuing credit note. The supplier is going to reduce this liability. So for you to issue credit note, you will have to issue before the next year, 20th October, or date of filing annual return, whichever is earlier. Similarly, for you to claim ITC on the invoice or debit note, for the recipient, there is a time limit. Same, 20th October next financial year, or date of filing annual return. Okay, there is this time limit available. Okay. Anyway, let's go back. So what are the document by which I can take ITC was the understanding that we were trying to take. So we said we can take ITC by using tax invoice or revised tax invoice, debit note, invoice under RCM, document by input service distributor. If you're importing goods, then bill of entry will be the document by which you can take ITC. Now, like, look at the practical case where you would issue a debit note or credit note. Okay. When will you issue a debit note in practical, in exam questions? Your debit note is issued when interest is additionally charged. Under section 15(2)(d). Okay. Credit note is issued when there is discount. Under section 15 subsection 3 clause B. Discount given after the supply. That's when you will issue a credit note. These are the two practical cases that is being tested for debit note and credit note generally in your examination. So you please remember this. So I'm not very clear on the question that Shruti is asking. If you can put the questions for everyone, so not a direct message, then it will be easy for me to answer. Okay. So this is very important area called what are the information that should be there in an invoice. Very important change that we had happened over the past few years is that, is there any format for invoice? GST INV 01 is the format that is applicable. That is only for e-invoice. Other cases, only the content. What should be there is prescribed, not the format. Is it what are the content that should be there prescribed? But in case of e-invoicing, there's a format now. Okay, INV1. Now, whenever there is content that is given, who will prepare the invoice? Invoice is generally prepared by supplier, right? Now, supplier prepare the invoices, he miss out the details. And who will be in trouble? Recipient, because he is not able to take ITC. Now, the problem is of supplier and the consequences is on the recipient. Now, recipient is in trouble. So there is a provision which says not all the details in the invoice is mandatory for you to take ITC. But for you to take ITC, at least 5 details have to be mandatorily there in an invoice. What are these 5 details? Let's look at. So it's there on the screen. I'm going to read it and then explain it to you. Rule 36 mandates that the document based on which ITC is taken should at least contain following details. Number 1, the amount of tax charged. Number 2, description of goods or service. Number 3, total value of supply. Number 4, GST number of supplier and recipient. Number 5, place of supply in case of interstate supply. So they're saying that in case some other details are missing, it's okay. But if your invoice is not having any of these 5 items, then you are not eligible to take ITC. What are these 5 items? tax charged? Very important, because that is what you will take it as ITC. What is the description of goods or service? That is required because there could be some block to credit that is there that you can't allow. Okay, so what kind of goods you're purchasing? What is the value? And GST number of supplier and recipient is mandatory, and place of supply in case of interstate supply. Okay, there. What are the other conditions that is to be satisfied? First condition is that you should be in possession of tax invoice, debit note, or other prescribed document. Number two, he should be receiving goods or service. You should have received goods or service for you to take ITC. Okay, now let's look at few understanding based on that. Look at this example. Say, MyG Mobiles, which is a retail mobile chain that is quite famous in Kerala. They are purchasing Xiaomi phones for selling. They're purchasing Xiaomi phones. Which date was the invoice? Invoice was given on August 2022. Okay, that's the invoice date. And invoice is for 1 lakh rupees. GST is 18,000. They got the goods in October 2022. So they got the goods on October. So they got the invoice in August and they got the goods in October. Which month the MyG can take the credit? Can they take the credit in August or only in October? Only in October, because goods are to be goods or service that needs to be received for you to take ITC. That is the second conditions for availing ITC. So in examination question, wow, they'll give your examination question. They'll say compute GST liability for the month of March. Okay, they'll say compute GST liability for the month of March. Next line, they will say that there is goods to be received, goods invoiced in March, but to be received in June. So they'll say goods invoiced in March to be received in June. GST paid is 50,000. Can you take ITC? You are computing GST liability, ITC available in March. And they'll say ITC to be availed in March. But they have received invoice in March, but they are going to receive the goods in June. You can take only credit in June. So that you cannot include in the ITC available. So this is how the questions will come. Now, second question. Say Tata Steel is making sale of goods to Mr. Raju. They have given an invoice. Tata Steel has given an invoice in the month of January for 10,000 kg of steel to be sold to Mr. Raju. And GST on steel is 20 lakhs. Okay. Somebody has asked me to repeat which one, this one. It's very simple, straightforward understanding. You can take the credit only in the month in which you're receiving the goods. So my invoice is given to me in August, but I got the goods only in October. Which month you can take credit? Only in October, because that is the month in which you have received the goods. Clear? Okay, so look at the second example. Tata Steel has given an invoice to Raju for 10,000 kg of steel to be supplied. Invoice was given in January month. But can you transport the entire 10,000 kg of steel in one lorry? No. So what they did, they have decided on this one invoice, they will do 3 delivery. So the delivery of this steel to the customer is going in parts or load or installment. So the first lorry with 4,000 kg reached in January. The second lorry with 3,000 kg reached in April. The third lorry reached only in August, which another 3,000. That makes it full 10,000 kg of steel delivered, and all this 10,000 was given in one invoice, for which GST is 20 lakhs. Now, Raju wants to take the credit of this 20 lakhs. Raju wants to take the credit of this 20 lakhs. Question is, when can Raju take the credit of this 20 lakhs? Can he take it in January? So the understanding is that goods should be received. He received partially in January, partially in April, and partially in August. So there, the provision says if the goods are received in lots or installment, can you take partial credit? Like out of the total 10,000, 4,000 is received in January itself. So 40% credit in January, can you take? No. You can take the credit only upon receipt of last lot or installment. Understanding? So when is the last lot receipt? In the month of August. So you can take only credit in the month of August. Which credit? The entire credit you can take only in the month of August. Clear? Can I have a quick yes? Okay. So the second condition says the goods or service should be received for you to take credit. Now the next example is there on the screen. I will explain it. You have to give me an answer on this scenario as well. We all know about this company called Louis Philippe. Okay. So the Louis Philippe company is located in Bangalore. Okay. Louis Philippe is located in Bangalore. What is that Louis Philippe wants to do? Louis Philippe wants to get the best of cotton raw material from Coimbatore. So they went to Coimbatore to get the best of cotton. So they went and approached a cotton mill in Coimbatore. Cotton mill in Coimbatore. Now, who's supplying the cotton? The cotton mill in Coimbatore supplying the cotton. How much is the price of the cotton? It is 1 lakh. To whom it is supplied? To LP. When did it get supplied? On 10th January 2022. That day, 10th January, the invoice was given by cotton mill to whom? To LP. And LP immediately paid 1,18,000 rupees to the cotton mill in Coimbatore. Immediately paid 1 lakh rupees. So no problem. But the scenario is slightly different here. Now, what is that Louis Philippe wants? Louis Philippe, the company is only making new designs. They are finding the best of cotton and asking someone else to stitch it for them. So the stitching of clothes, shirts and pants and everything, that is outsourced to another vendor who's sitting in Tirupur, which is very next to Coimbatore. There are two options available to Louis Philippe. Okay, you have to tell me which option would you prefer. Option number one, ask the cotton mill to deliver the goods to the cotton raw material. Okay, ask the Coimbatore cotton mill to deliver this cotton raw material to Bangalore office. From Bangalore office, they'll dispatch it to Tirupur, which is very near to Coimbatore. Option number two, ask the Coimbatore cotton mill to directly deliver this particular cotton raw material to the Tirupur job worker. Now ask the job worker to finish the job work, and then after finishing it, the final product will be transferred back to Louis Philippe. Which one would be the ideal option that they will be doing? Option B looks always better than option number one. Okay, so what is that will happen ideally? The cotton mill in Coimbatore, they are saying we will directly give it to the job worker in Tirupur. So January, Louis Philippe paid the money, got the invoice, but the goods are delivered to job worker in Tirupur in February month. So that was delivered in February month to the job worker. What the job worker did, job worker finished all the stitching. In April 2022, it is given to Louis Philippe Bangalore office for further dispatch of final product. Now, who wants to take the credit here? Louis Philippe, because they are the recipient of this cotton raw material. Now, when can Louis Philippe take the credit of 18,000? Can they take it in January, February, March, April? Which month they can take the credit? So the provision says you can take the credit only when you receive the goods or services, right? The provision says you can take the credit only when you receive the goods or service. When did the Louis Philippe get the final product? In April, right? But can this particular credit be taken in February itself? The answer is yes. Why? Because when it was delivered to the Tirupur job worker, the one who's going to stitch, who's the owner of this cotton raw material? Even though the Tirupur job worker received the goods, did they receive it on its own capacity? Or did this Tirupur job worker receive the goods on behalf of Louis Philippe? They have received this on behalf of Louis Philippe. So the provision says it will be deemed to be received by Louis Philippe in February itself. So when they can take the credit, they can take the credit in February. So when a third person receives the goods on behalf of Louis Philippe, then Louis Philippe can take the credit on the month in which it is received by the third party. This is the provision. Now the invoice issued by this cotton mill will be a peculiar invoice. That invoice is called as bill to ship to invoice. The invoice issued by this cotton mill will be called as bill to ship to invoice. Why is it called as bill to ship to invoice? Because it is billed to Louis Philippe and the delivery is done to the Tirupur job worker. It's billed to LP and it's shipped to Tirupur job worker. So can LP take the credit on and bill to ship to invoice? The answer is yes. In the month in which it is received by the third party. Are you guys understanding this? Okay. Now the third condition and fourth conditions are very simple, straightforward procedural condition. There's no way that they can check it. Third condition says tax should be paid to the government by the, it is not, you want me to repeat bill to ship to? I can do that once again. It's all very simple, straightforward understanding, right? So this Coimbatore cotton mill is giving the invoice to whom? To Louis Philippe. Where is it is delivered? It is delivered to the Tirupur job worker. So the invoice here will be called as bill to ship to invoice. With this invoice is given to Louis Philippe. Louis Philippe can take the credit in the month on which the goods are received by the job worker. In the first example, if the goods is first received, then invoice is later issued, then you can take the credit only when the invoice is received. When I'm saying there are multiple conditions to be satisfied, okay. When I'm saying there are multiple conditions to be satisfied, when can you take the credit? In which month you satisfy all these conditions? Say I received the invoice in January. I got the goods in February. The tax is paid in March. So when did I complete all the conditions? In March. Likewise, it will come. So if you have multiple conditions to be satisfied, when did you complete the last condition? That month you take the credit, because the previous month you still have one more condition to be satisfied. Are you guys understanding? Is it clear? Okay. Now, so the tax, they are saying that it is not enough that the person who is purchasing the product or the service paid the taxes to the supplier. Supplier also has to pay to the government for you to take credit. Also, how much ever credit do you want? You will have to mention it in your 3B. So you have to claim the ITC in your 3B for you to take the credit. Now, the most important condition would be the new condition. What is it? There is a new section that is introduced, which is an amendment called as 16 subsection 2 clause AA. Mark this as very important for your exam, especially for November exam, because there's a very, very high chance that this will be repeated. There could be some question that they'll frame for you to, to test you with this particular concept. Okay. Now let's look at this. They are saying there is this fifth condition you need to satisfy. Only in that month you can now take the credit. What is this fifth condition? Earlier we have 4 conditions. 1, you should be in possession of invoice. Condition number 2, you should receive the goods or service. Condition number 3, tax should be paid. Condition number 4, you should mention this amount in return under section 39, which means 3B. Now they're saying fifth condition. Your detail of invoice you are mentioning in clause A. You're saying that you're in possession of an invoice. That invoice, the details of such invoice or debit note referred to in clause A has been furnished by the supplier of your product. So you're purchasing from someone, right? He has to furnish that invoice in his statement of outward supply. What is the statement of outward supplies? Can anyone tell me what is the statement of outward supplies? Which return? 3B is called a summary return. Statement of outward supply is GSTR1. Statement of outward supply is GSTR1. This details needs to be uploaded in GSTR1. Details of invoice or debit note referred to in clause A has been furnished by supplier in statement of outward supplies means it should be furnished in GSTR1. Okay. And such details have been communicated to recipient of such. Okay, so they can be GSTR1 or now you have something called as IFF. Can someone expand IFF for me in the chat box? Invoice furnishing facility, correct, very good. So you have something called as invoice furnishing facility also. Okay, so you have your supplier from whom you purchased this product, they need to upload the invoice in their GSTR1. So if you are under QRMP scheme, quarterly return monthly payment scheme, if you're under quarterly return monthly payment, then for the first 2 months, you can use this facility called as IFF to do the GSTR1 upload. Okay, it's the same. In QRMP, first 2 months, instead of GSTR1, you have an option to do it through IFF. So the supplier has to upload this information, and that is not enough. Okay, the provision says such details, read the second part, such details have been communicated to the recipient of such invoice or debit note in the manner specified under section 37. Okay, so this detail should be communicated to recipient of such invoice or debit note in manner specified under section 37, which means it has to be communicated to the recipient in their GSTR 2A or 2B. It needs to be reflected there. Okay, now we can say 2B for easier understanding because 2A gives you a different kind of a sorting of this info. Okay, now let's try to understand this. What is this logically and how is it going to be tested in the exam? What is it different in the earlier, how is it different? How is it an amendment? We'll try to understand. For you to understand that, you need to understand a bit about the return structure that we have in GST. Okay, so first let me give you an overall idea on how the return structure in GST works. So every person except composition levy scheme, okay, except composition levy scheme, ISD, TDS, TCS person, OIDAR. Okay, so except these specific people, because composition levy scheme people will file a return on a financial year basis. They'll do a quarterly statement called a CMP08 and all that. ISD is input service distributor like head offices and all that. They don't have outward supplies. TDS, TCS person, they just pay TDS or TCS. They don't make an outward supply. OIDA has a specific return. They are from outside India. They have a specific registration, specific forms. Except these people, all others will go ahead and then file 2 returns, GSTR1 and GSTR3B. What is GSTR1? The return on outward supply. What is GSTR3B? Which is called a summary return. Summary return would look like this. Suppose this is what we will generally do in case of computing net GST, right? You find out how much is your outward tax supply. Based on this outward tax supply, you will find out how much is your outward tax liability. OTL is outward tax liability. Then you check how much is your purchases, how much is your inward supply, and how much credit you have. So you reduce that credit, then net to GST is what you will pay together with 3B. This is called a summary return of 3B. Now GSTR1 is nothing but it's a return on outward supply. It's an information return, which means the government is not asking you to pay taxes by using GSTR1. They are asking you to furnish information in GSTR1. What do you mean by furnish information in GSTR1? Because if you look at the structure of GSTR1, you will understand that. In the notes I have given how somebody has to file GSTR1. Go few pages ahead, then you will understand. Details to be submitted in GSTR1. If the supply can be broadly classified into two categories of supply. One is B2B, another one is B2C. What is B2B supply? A registered person making supply to another registered person in GST is called as B2B supply. What is the relevance of B2B supply in GST? What is so peculiar about B2B supply? When registered person is making supply to another registered person, now what is the option available to the recipient? Think. Only in case of B2B supplies, when registered person is making supply to another registered person, there is a question of taking ITC. Because you remember, for you to take ITC, the supplier and recipient has to be registered. Okay, both of them should be GST registered, then only they can take ITC. So when the supply is a B2B supply, which means supply is made from one registered person to another registered person, the recipient is going to take ITC on the tax paid on purchases. Say, I'm registered under GST. You are also registered under GST. I sold you some product, which means it's purchased for you. When I'm selling product, I will collect GST from you and I'm going to pay to the government. You're going to take ITC of that. Now here, the government has a risk. I might be paying lesser amount and you might be taking extra credit. How will the government cross-check this? For this purpose, government is using a return called as GSTR1 to make amends. How? When I am making supply to a registered person, government is asking, give me the invoice details uploaded in GSTR1. So the next month, in general cases, next month, before 11th of next month, which means if I made supply in the month of August, before 11th of September, I will upload the invoice details to GST common portal using my return called as GSTR1, which is statement on outward supply. Now the government is having this information available with them. If the supply is a B2C supply, then there is some consolidated details that needs to be given. Okay. Now, what is the relevance of this in our existing understanding? Only a B2B supply will be eligible for taking ITC, right? So in GSTR1, what people will generally do is that they will upload the invoice-wise details to them. Now, look at this example for the easiest to understand. Say MyG and Xiaomi. Okay, there's so much of information in this example. I will decode each and everything for you. Carefully, you go ahead and then try to understand this. There is Xiaomi and MyG. And MyG, our friend MyG, is purchasing certain goods from Xiaomi. How much worth the goods are being purchased? 5 lakh worth goods with 90,000 GST. The goods were delivered and invoice was given to MyG in the month of January 2023. Jan 2023, invoice is given, delivery is also done. So ideally, when MyG is purchasing from Xiaomi, who can take ITC? Give me answer on the chat box. Who can take ITC? MyG can take ITC. There is no doubt on that. MyG can take ITC. How much ITC MyG can take? 90,000. So here the question is, how will the government check? What if MyG has in their 3B return, MyG saying that I have a credit of 1,50,000. How will the government know whether MyG has credit of 90,000 only? There's a chance that MyG will say that I have a credit of 1,50,000 and MyG is trying to take 1,50,000 as credit. So the best method in which government can check this is by using the return mechanism we have, because Xiaomi, as far as Xiaomi is concerned, for Xiaomi, is it an outward supply or an inward supply? It's an outward supply for Xiaomi. So whenever Xiaomi is making an outward supply for 5 lakh rupees plus 90,000 GST, what is that Xiaomi has to do? Xiaomi has to upload this information in a return called as GSTR1. Right? Before what date? If the supply is January supply, they have to upload this information on or before which date? 11th of February. You have to do this before 11th of February next month. Right? Okay. So when Xiaomi is uploading this, can Xiaomi upload consolidated details here, or whether Xiaomi has to give this invoice-wise details here? Should they give the invoice-wise details? Yes, they have to give invoice-wise details, because this supply from Xiaomi to MyG, since both of them are registered, will be called as what supply? It will be called as B2B supply. This is called as B2B supply. So whenever there is B2B supply, the supplier has to upload invoice-wise information in their GSTR1. So when the supplier is uploading invoice-wise details in GSTR1, in that detail, what are the information available? What is the invoice number? What is the value? What is the GST? Who's the recipient? Who's the supplier? Which means with this information, can the government identify the recipient is MyG? Can the government identify the recipient is MyG? Yes, government can identify. Now, what is government is going to do now? They're going to use data technology. They're going to tell MyG that MyG, you don't take whatever credit you like. You can't take whatever credit you like. You might have invoice. You might have received the goods. You might have paid the taxes. You might be showing this in your 3B, but you can take credit only for the amount that is uploaded by Xiaomi in their GSTR1. Now the MyG is asking another question. How will I know how much my Xiaomi has uploaded? Xiaomi has uploaded in their GSTR1, right? You government, you have GSTR1 information of Xiaomi. Xiaomi's GSTR1 is not available with me. Now, how will they solve this particular problem? Now, that is where another return called as GSTR2B becomes important. What happens? Government will automatically give the information of Xiaomi's GSTR1, where recipient GST number is MyG's GST number. Like Xiaomi, there will be lots of people in India uploading information in their GSTR1. In all their GSTR1, wherever the recipient GST number is MyG, government will consolidate that information using data technology and automatically make it available like a message to MyG in their portal. So MyG, what they have to do, go to their common portal, click on this return called as GSTR2B. In that GSTR2B, there will be all the invoices where the supplier has uploaded the information in their GSTR1 and where the recipient name is MyG name. Are you guys understanding? Yes. So if the uploaded number of invoices, if the name of MyG is as recipient, that much credit only MyG can take, which means how much credit will be available for MyG here? 90,000, because it is uploaded. Now, how this will be tested in the exam? Now, let's go back and then read the provision. What is that they're trying to communicate here? Now, this has been introduced as section 16(2)AA. Earlier, even if it is not uploaded, they could take additional 5% credit. Now that is not there. That 5% extra credit is gone. Now only how much credit you have in your 2B. That is all you can take. So additional condition for availing ITC is what is that we have as an additional condition now? The invoice should be uploaded. The invoice should be uploaded in the GSTR1 of the supplier from whom you have purchased. And it should be reflected in the 2A or 2B of the recipient. Only then this recipient can take the credit. Are you guys understanding? Now let's look at an example question to get how this will be reflected in your examination. Okay. They'll say, so which is the section you should refer here? You should write section number 16, subsection 2, clause AA. And say that, say Mr. Ram in August 2022 have 100 invoices as inward supply. Has 100 invoices as inward supply with GST of rupees 80,000, out of which only 80 invoices are reflected in GSTR2B of August with GST of rupees 60,000. What is the ITC available for Mr. Ram? Is it 60,000 or is it 80,000? How much ITC they can take? They can take only 60,000. Now, what about the balance 20? What about the balance 20 invoices? Suppose that got reflected in their 2B in the next month, which is September. Can they take the credit in September? Yes. That's all. Which month you get it reflected, that month you take the credit. But in August, I can take only 60,000 credit. You guys understanding this? Now the context would be this. Now, suppose you know that you have something called as QRMP scheme. What is QRMP scheme? Now, the return structure under GST has now been changed from 1st January onwards. If the previous year aggregate turnover of a person is less than 5 crore, okay, look at the screen. If the previous year aggregate turnover is less than 5 crore, if the answer is yes, they get an option to go for QRMP scheme, quarterly return, monthly payment. Payment goes monthly, but you can file return quarterly. But is it mandatory that everybody who's having turnover less than 5 crore can go for QRMP scheme only? No, it's an option available. Now, if they don't go, then it's monthly for them, which means they'll file GSTR1 on 11th and 3B on 20th. Okay, that's the deadline. Now, if it's QRMP scheme that they have opted because their turnover, see, if the turnover is 7 crore, can they even think of QRMP scheme? No. The turnover is less than 5 crore and they have opted for QRMP scheme, then instead of filing monthly return, you can go for quarterly return of GSTR1 and 3B. What does that mean? For all the invoices in a quarter, say, which is the current quarter, which is the current running quarter. So we are in September, which means the current running quarter is July, August, September, right? Current running quarter is July, August, September. Now, This 3 months, all the invoices I can upload in October. Right? Which date? GSTR1, 13th of subsequent month from the end of the quarter, which means for July, August, September, I'll file before 13th of October. 3B also, I can make the payment 22nd of subsequent month from the end of the quarter or 24th, depending upon the state. Now, which means if I have an invoice in July, I will upload it only in the month of October, right? So my customer, if he is a registered person and he wants to take credit, he's in a disadvantage. Reason, I gave him an invoice in July, right? I gave him an invoice in July, but when can he take the credit? Only in October, because I upload only in the month of only in the month of September, which means when I'm filing the returns in October, because I did not upload this information in July or August. For those 2 months, to give you that facility, they have something called as IFF. They can upload the invoices. They don't need to wait for the 3rd month GSTR1. They can actually go for, rather go for IFF facility and then upload it. Okay, which are the states that will come under 22nd for the deadline, and which are the state comes under 24th? Because last examination, they have asked a question like that. So to look at that, the best method is to look at the state in this order. See, look at India here. You are just putting India into 2 different segments. So all the states that is coming under South, Middle, which means Central India, South India, Central India, and the western part of India. Okay, which are the states comes under South? 5 states: Kerala, Tamil Nadu, Karnataka, Andhra Pradesh, Telangana. Which are the states that comes under West? Goa, Maharashtra, and Gujarat. Central India, Madhya Pradesh, and Chhattisgarh. These many states will have 22nd as the due date for filing 3B if they go for QRMP scheme. And including all the union territories in South or West or Central. Central, there is no union territory. So what are the union territory comes below this line? Which is Lakshadweep, Andaman Nicobar Dweeps, Pondicherry, Daman Diu, Dadar Nagar Haveli. Okay, so these many places it is 22nd, all other states it's 24th. So we can say South, West, and Central and Union Territories at that time is 22nd. Balance North, East, and Northeast, and Union Territories near to that will come under 24th. Okay, this is how we can learn that. So IFF facilities were pretty straightforward. It says you can take the credit. So for somebody, if they want to take the credit, I will allow them to take. So how will I upload in that month itself? I don't have a return of GSTR1 on monthly basis. Don't worry, you go ahead and then file a IFF based return uploading facility, utilize and upload the invoices in IFF. That will be reflected in the 2B of the recipient in that month itself. Okay, this is the understanding. Because this is the new provision. Please go ahead and then learn this provision and then try to understand how this will impact. Okay. So whatever we have discussed so far, is it clear? The conditions for availing due date. Due date of IFF is 13th of the subsequent month itself, same like your GSTR1. The due date is 13th, which means from 1st of that month till 13th day, you can do an upload using IFF facility. So this is for the first 2 months. Say you're filing returns for July, August, September. This is the quarter. Okay. If your turnover is more than 5 crore, I'm just giving you how you have to understand this. Very simple, straightforward. See, I'm a supplier and the quarter is July, September, October. July, August, September. This is the quarter. And you have 2 options. If my turnover is less than 5 crore, if I did not offer QRMP, I will have July GSTR1, August GSTR1, September GSTR1. Next month, 11th, I would have uploaded. No problem. They'll take the credit. I opted for QRMP because my turnover is less than 5 crores and I have opted QRMP. Then all these 3 months together, I can go upload it in GSTR1 of quarter 2 of this financial year, which means July, August, September together I can do before 13th October. But some of my customers are registered suppliers. They are calling me and saying, see, I want to take credit in July month itself. How will I take it? You are not uploading. Then I said, don't worry, I'll upload in IFF. When from 1st of August till 13th of August, next month till 13th, I can upload. Second month, again, they're calling and saying, you have not uploaded for August. I'll do it by using IFF. Third month, I have GSTR1 coming in. No, I'll do it in that. This is the understanding. Is it clear? Whatever that I've discussed so far in terms of conditions. Can I have a quick yes? Quarter is something that is fixed. Okay, so I have a question from, I don't know how to spell your name. So the question is, I didn't get how July, August, September is coming as quarter. So in a financial year, how many quarters are there? 4 quarters. Financial year starts April, May, June. This is quarter number 1. Okay, so what is quarter number 2? There are 4 quarters in a year. 3 months is 1 quarter. So it's straightforward understanding, guys. April, May, June, the July, August, September. October, November, December is a 3rd quarter. Jan, Feb, March is the 4th quarter. Understanding? I hope that's clear. Now, section 16.3. This is also tested in MCQs and everything. So it says, yeah, if the filing is monthly, again, there's a question which is a direct message. So I'm trying to read that question. If it is monthly filing, which means if it's not under QRMP, then the due date will be 11th for GSTR1 and 20th for GSTR3B. Correct. That understanding is correct. Section 16.3 depreciation. Okay, what it says. Say I purchased a machinery and the value of the machinery is 10 lakh and GST is 1,80,000. So total price I paid for the purchase of machinery is 11,80,000. Question is, how much will I capitalize in my books of account? When I purchase a machinery, will I show it as an expense or an asset? I'll show it as a non-current asset, right? So it's an asset for me. So when I'm capitalizing asset, can I capitalize the entire 11,80,000 or should I capitalize 10 lakh on it? What is the amount that I'll capitalize? So the understanding here is if you capitalize 11,80,000, which means you will claim depreciation on the entire 11,80,000, which means if it is for 10 years, you will divide the 11,80,000 divided by 10, which means 1,18,000 every year you will claim depreciation. Then you're claiming depreciation even on the GST component. Then you're not allowed to take ITC on 1,80,000. So if you're not claiming ITC on the GST component, then you are allowed to take depreciation on the GST component. Otherwise, what you should do, you should only capitalize 10 lakh and take 1,80,000 as ITC. Okay, so you cannot claim both depreciation and ITC on the tax component. Say there's a block to credit. You purchased a motor vehicle, for example, a car. You can't take ITC on the GST because it's blocked. So in such cases, what will you do? You can't take ITC on the GST, then you will capitalize the entire purchase value, including GST. So if you can capitalize the GST, then you can take ITC. Sorry, you can take depreciation benefits. But if you are eligible for ITC, don't capitalize the entire amount, only capitalize value. Taxes you can't capitalize. This is the understanding. Next. Okay, I've already discussed about the time limit. Now let's discuss payment condition. Question number 1 would be this. Is payment a precondition for claiming ITC? I want some of you to comment about this in the chat box. I'll repeat the statement here. I used to repeat this in classes multiple times. Is payment a precondition for availing ITC? Is payment a precondition for availing ITC? What do you mean by precondition? Because only when I purchase something and I want to take ITC, I have 5 conditions to be satisfied. In that 5 condition, does it talk about I have to make payment to the supplier for taking ITC? Is there anything like that? No, it is not a precondition. Okay, so you don't have to make payment to the supplier to take ITC. But they're saying that if you don't make the payment, which means if payment of consideration, that is value plus taxes, not made within 180 days. Now I'm checking payment only after 180 days from the date of invoice. If you don't make the payment within 180 days, then whatever ITC you have already taken needs to be reversed. They're saying I'll give you a reasonable time to make the payment. If you don't make the payment within 180 days, you have to reverse the ITC together with an interest of 18% per annum. Are you guys understanding this? Now, say in an example, I've put an example here. Say invoice date is 10th January. Okay, so I've purchased something on 10th January from a supplier. I made payment to him on April 25th, which is within 180 days. Which means when I would have taken the credit in January itself. Is my credit in January intact? Yes, no problem, because your payment is within 180 days. Suppose the credit is say 18,000 in January I have taken. Okay, I've made a purchase of 1 lakh, 18,000. All conditions satisfied, all 5 conditions satisfied in January. I've taken 18,000 credit. Now I made the payment to the supplier on 25th of April, means within 180 days, no problem with the credit. What if I don't make payment till 180 days from the date of invoice? So from 1st of January, 180 days ends on 8th July. Say 8th July, till 8th July, I did not make the payment. What will I do? I have to reverse my credit I have taken, which is 18,000 together with interest. I have to reverse it. Why I would not have made payment within 180 days? Simplest reason to look at is I did not have money. I had no money, so I did not make the payment. So what happens? Now, when I have the money, I will actually make a payment again. Okay. So I got the money in August. So I made the payment again. So when I'm making the payment, I would make the payment together with the GST, right? So can I take the credit again? The answer is yes. So you did not make the payment for 180 days, you will reverse the credit. But when you actually make the payment to supplier, take it again. So when you're taking the credit at that time, no need to bother about the time limit under 16(4), which means next year, 20th of October or date of filing annual return. No need to worry about it. Say your invoice date is 10th January, and you want to make the payment. You actually made the payment on November next year, okay, which means November 2020. Can you take the ITC in November again? Yes, because when you are re-availing the credit after you make the payment, your time limit is not applicable there. So there is another provision like that as well there. So please be careful. This payment condition is also tested in the examination. So first point, payment is not precondition, take full credit. Then after 180 days, if you have not made the payment, reverse the amount together with interest. When you actually make the payment, take it again, but you can't take the interest. Interest is gone. But at that time, don't consider the time limit for taking ITC and all that, because it's not an ITC you're taking fresh. You've already taken ITC. Now you have made the payment. So there's a question from Vinayak, I guess. How will the government know whether we made the payment? There is no way government can track this. There is no 2B mechanism here. The only way is that the auditor, when they're checking, they will ask you to do the accountant. So when the department comes and do an audit, they will try to understand this. So there's no other way. Okay, so I will stop the first part of discussion here. We'll take a quick break. We'll come back and discuss the next topic, which I want to discuss the block to credit concept a bit here. and then we'll close with that. Okay. So I'll give you a 15 minutes break because I don't want to stretch you for like 2.5 hours on one stretch. It's already been like 1 hour 45 minutes. So I'll give you a 15 minutes break. You come back, we'll do another 45 minutes probably. We'll see how much we will take to complete the block to credit. We'll do that much, and then we'll close for today. And rest we will take it in tomorrow's session. So don't exit from the Zoom. You can just mute it and then probably have your, I don't know whether you've taken dinner, not. If not, you can go ahead and then do that. Or you can go ahead and then have probably a quick refresh on the topic. I've given you the PDF. Somebody please reshare the PDF here, and then we will come back. Okay. Okay, so let me address one by one. Do you want more scenarios and examples? Definitely, I'll try to add, but the problem is we have 2 hours to complete something quite big. So wherever is important, I'm going to add more examples. Okay, in block credit and all, I can add more examples. These classes will be available in YouTube. Let me give you the YouTube link. It will be available there. I will upload it. So there's another question from Monica. It says in their in their option for the suppliers to figure out whether ITC is claimed by recipient or not. I hope this question is there any option, right? Is there any option for the supplier to figure out whether the ITC is claimed by recipient or not? Whether they availed it or not? No, there is no such option. Because we don't have to really bother, no? They just have to upload. Whether they claim it or not is, I will upload the classes. Don't worry, guys. I have the recordings available with me. Give me an hour from here. Class to 1 hour la, I will upload it. So can we start discussing the rest? Can I have a quick yes to mark attendance of all of you guys after the break that we have taken? Okay. Cool. So okay, so let me get started with. So the next concept that we're going to discuss in ITC chapter is block to credit. Very important. There is no question or no exam for inter where they have not tested this particular area. So this is like if you spend another 30 minutes and it's something that you can short expect in the examination. Okay. But it's unique. You cannot really learn this broadly. You have to go in detail and then try to understand. First, let me give you a concept on what do you mean by block to credit. What is block to credit? Why there is blocking of credit? So the concept of block to credit is very simple. The government is saying that initially in section 16, which section talks about block to credit? It's 17.5. So you remember section 16 has conditions, section 17 has 2 parts, apportionment and block to credit. We are only focusing on block to credit now because apportionment rules are removed from your discussion. So block to credit as a concept, what it means? It says in section 16, we have already discussed saying that one can take credit only if they satisfy 5 different conditions. Now I'm telling that even if you satisfy those conditions, I'll not give you credit. Why? I'm going to block your credit. That is why they're saying the concept is called as block to credit or ineligible credit. Even after you satisfy all the conditions, following credits are ineligible for you. What should be the reason why it is ineligible credit? Because if I allow people to take credit on following items, they have listed a series of inward supplies of goods and services, wherein they said, if I allow people to take credit on this, people will misuse it big time. And I will not have any control on which credit I should allow, which credit I should not allow. So government has decided broadly that I'll not give any credit at all. Instead of saying I'll give you some credits and not credit, They said, I'll not give you credit at all. I'm blocking your credit. So section 17(5) has 3 clauses that we have to discuss first. Okay, so I have 3 different charts for you to learn, like 4 charts basically. So chart number 1, chart number 2, chart number 3, and chart number 4. So I'll try to bring as many examples as possible for you to understand all of this in detail. Now let's look at the first clause. Okay. So the first chart has 3 clauses. What is the first type of inward supply? They said, I'll not give you credit even if you satisfy all the conditions. They said it is on motor vehicle. What kind of motor vehicle? Motor vehicle meant for transportation of passengers. But any type of motor vehicle? No. They said with an approved seating capacity less than or equal to 13 persons, including driver. So first block to creditors, motor vehicle meant for transportation of passenger with seating capacity less than 30. Why? Say, I personally have a car. Now, if you look at the car, I have paid around 2 lakh rupees is just GST. Now, if credit is allowed on purchase of car for a company, what will I do ideally? Even though I'm using the car for my personal purposes, I will buy this car in the name of my business and take 2 lakh rupees as credit and tell the government that, see, I'm using it for business and personal. How will the government check on a car whether it is allowed, whether it is for business or it's for personal? Somebody is traveling. So it's very difficult for people to really, or for government to really say whether this car that is being purchased, is it for personal or is it for business? So they said, if I allow people, then nobody in India would actually buy a car for their personal purpose. Everybody will buy for some business and then use it for personal. So this could result in a massive misuse of credit. So the government came up and said, don't worry, my solution for this is that I'll not give you credit at all. As simple as that. They blocked the credit. They said, you satisfy all the conditions. You have an invoice. You've paid the taxes. You've received the goods. You filed the returns. That person has uploaded in GSTR1. You got it in your 2B, but don't take the credit because it's blocked. But will all type of motor vehicle blocked from taking credits? No. They said motor vehicle meant for transportation of passengers having approved seating capacity less than or equal to 13 persons, including driver. Now let's go to examples. Say, Nokia has appointed our friend Vaishnav as their CFO. And Vaishnav is saying, Nokia, see, for me to join Nokia as a CFO, I have one condition. What is that condition? Nokia has to buy a C-class Benz for the CFO to travel. Now, Nokia checked it out. They said, Vaishnav is a very important resource. We will buy a C-class Benz. So Nokia is now buying a C-class Benz. And where will they account it as? In books of accounts of Nokia as stock or as an asset? Answer that on the chat box, please. It's an asset. So in GST, when you purchase an asset and you capitalize it, what is it called as? What kind of inward supply that will be? You have 3 types of inward supply. I started with that discussion in the beginning. It's called as inward supply of capital goods. Okay. So purchase of C-class Benz by Nokia will be treated as inward supply of capital goods. The question to you is this: can Nokia take the credit? And suppose they have paid 15 lakhs as GST. So 50 lakhs for the car, 15 lakhs GST. Can Nokia take the credit of this GST paid on purchase of this car for their CFO? No. Why? Which section says it's not allowed? Section 17(5)(a), because this car is a motor vehicle meant for transportation of passenger, then the approved seating capacity is only 5. Okay, so it's a block to credit. So Nokia cannot take the credit of this car because if it is allowed, then people will misuse it. Now, Nokia also purchased a bus, 32-seater bus for transportation of their employees. And they paid 6 lakh GST, 30 lakhs plus 6 lakh for purchase of this particular bus. This bus is also accounted as an asset or a capital goods for Nokia. Can Nokia take the credit on purchase of this bus? Yes. Why they can take the credit of bus, but they can't take the credit on this car? Because the approved seating capacity for the bus is 32-seater. So only when you purchase something less than 13-seater, you are allowed, your credit is blocked. If you purchase above 13-seater buses, it is allowed as credit. Because there is no chance of misuse. Nobody will purchase a bus for their houses, no? They'll all purchase cars for their houses. Understanding? So the chances of people misusing this provision in case of a bus is very less. So they said, take credit, because buses generally is purchased by businesses only. Similarly, what if Nokia purchases a container truck for distribution of their mobile phones or whatever product they are producing across their dealership? They purchased a truck and they paid 30 lakh, 5 lakh in that as a GST. Can Nokia take the credit of this? Yes. Why? Because block to credit does not include goods meant for, what is the block to credit? Motor vehicle meant for transportation of passengers. Okay, here this truck is meant for what? Is a truck meant for transportation of passengers or goods? Goods. So can they take the credit? Yes, they can take the credit. Say, look at another example. Kalyan Jewelers. They wanted to transport their jewelry from one branch to another branch. Will they purchase a truck for transporting jewelry? No, they purchased a Mercedes Benz. Okay, it's as a car. Okay, and they purchased a Mercedes Benz. Okay, say Benz Matic, which is a car, which is a very good luxury car for transportation of their stock. Because their diamonds and gold and all is only one briefcase only. Okay, it's not like huge quantity. So they sort of will transport in a Mercedes Benz only, and they paid like some 40 lakh plus 10 lakh GST on purchase of this Mercedes Benz. Now my question is this: can they take the credit on GST paid on purchase of this Mercedes Benz?
No.
Can they take the credit? So the contention of Kalyan Jewelers is that they're saying, see, I'm using it for transportation of goods only, like my jewelry is being transported. Can they take the credit?
No.
No. Why? Because here the end use is not what matters. What was it meant for? Mercedes-Benz Matic, is it meant for transportation of goods or meant for transportation of passengers? It is meant for transportation of passengers. Thereby, you won't get the credit. What you use it ultimately, the end use is not relevant. When Mercedes was manufacturing this particular vehicle, Mercedes was asked this question by the authorities to give an approval. Is this a goods vehicle or is it a passenger vehicle? Is it passenger vehicle? The person who's purchasing it might use it for different purpose. That's irrelevant. But what is it meant for? Is it meant for transportation of passengers? Yes. Is it having approved seating capacity less than 30? Yes. So is it allowed as credit or not allowed as credit? What's the answer? It is not allowed as credit. It's a block to credit because it is nothing but motor vehicle meant for transportation of passenger having approved seating capacity less than or equal to 13%, including driver. Now, there are exceptions to this. What do you mean by exception to a block to credit? When there is exception to block to credit, credit will be allowed or not allowed? Credit will be allowed because block to credit means credit is not allowed. Now have an exception. I will give you credit because government says that in some cases, if I don't give credit, no, it's completely unfair. So in some cases, I'll give you credit. Which are the cases where I'll give you credit? That is being listed next. Exception to block to credit. Exception to block to credit. There are 3 exceptions. I'll read it first and then we'll go and see the examples. Inward supply of such motor vehicle, which means a motor vehicle meant for transportation of passengers, seating capacity is less than 30. They are purchased for providing outward supply of the same, which means a dealer. Second, for providing passenger transportation service, example is a taxi. Third one, for imparting training on driving such motor vehicle, like a driving school. Now we'll go and look at the examples. Say the first one. Suppose Maruti Suzuki dealership, they are purchasing 10 Swift car from Maruti Suzuki company, manufacturer. For what purpose? To sell it. So when the Maruti Suzuki dealership is purchasing 4 Swift cars, so 10 Swift cars, is that Swift car meant for transportation of passenger having seating capacity less than 13? Yes. Are they purchasing it and treating it as asset, or are they purchasing it and treating it as their stock in trade? Their stock in trade. Can they take credit, or they will not be allowed to take credit? They can take credit, because if I don't give them credit, then it will become double taxation. So it's a regular transaction. So it's a dealer can take credit. Now, Maruti Suzuki dealership has used one of these cars for transportation of their regional manager. So Maruti Suzuki dealership has purchased car from Maruti, as Maruti Suzuki Swift car, and it is used for transportation of their regional manager. Now, can they take credit of that car? No, that is blocked, because that car will be treated as an asset or a stock. That will be an asset. Then it will come under blocked credit. Are you understanding the context? Now, say I'm running a taxi company, which means my registration of this car, the number plate, will it be a private number plate or a taxi number plate? The yellow color taxi number plate, which means I'm running this as a taxi. So if I'm GST registered taxi company, I can take credit on purchase of Swift car if I'm running a passenger transportation service. That's an exception. Then I'm Maruti driving school. I purchase 10 Swift car to train people or impart motor driving skill. Okay. So can I take the credit of that? The answer is yes. So if I make an inward supply for training people on motor driving, so driving school purchases a motor vehicle, they can take the credit. This is the first one. What is the second block to credit? The second block to credit is vessel and aircraft. Now, vessel and aircraft is a block to credit. In our example, assume you remember our friend chartered accountant was appointed as a CFO. After 5 years working with Nokia, now this fellow gets a promotion as an executive director. Now, what is that he tells Nokia to do? Says, I'm bored by driving Mercedes-Benz. Now he wants to purchase a private jet. Now Nokia has to purchase a private jet for their CFO, now turned into an executive director. So they're purchasing a private jet for their director. Now, how much they have paid? They paid 30 crore plus 8 crore GST to purchase a private jet. Now, once they purchase a private jet, it will be shown as what in their books of accounts? As an asset, private jet in the books of accounts of Nokia. Question is, can Nokia take the credit of this? The answer is no, because it is an aircraft. Vessel and aircraft is a block to credit. Do they have any exception? Yes, there are 4 exceptions to it. Number 1, if they have purchased it for outward supply of the same, similar to what we have learned in closing. Second exception, to provide passenger transportation service like a taxi, if there is an airline or a boating service company, they purchase it. Then to impart training on navigating such vessel like flying academy for transportation of goods. Now let's look at example. Exception is very simple to look at. First, I'm a dealer of an aircraft. So what I do, I purchase helicopters to sell helicopters. Now, when I'm purchasing helicopter, can I take credit? Yes, because it's my stock. I can take credit. Second, in Indigo or in Air India or Vistara or SpiceJet, they purchase an aircraft. Can they take the credit of that? Yes, because they are providing their outward supply is what? Passenger transportation services, their outward supply, they can take credit. You guys must have watched this movie Surarai Potru or Uyarai if you're in Kerala. So in these things, the actors are going to get trained as pilot. So they go to an academy to learn flying. So there's a flying academy which has purchased aircraft to teach people how to fly. Can this flying academy take the credit on purchase of aircraft? Yes, that is an exception because they are imparting training on flying such aircraft. Similarly, I'm a company which teaches people how to navigate a vessel, to navigate a ship. Then I can also take the credit. So imparting training on flying such aircraft or navigating such vessel, I'll be allowed to take ITC. Then, suppose I'm a cargo company and I purchased a cargo ship. Okay. Vessel includes boat, ship, and everything. Okay. That's the definition that we have given for vessel. Now, say for example, if I'm purchasing a cargo ship, then I can take the credit because that particular vessel or aircraft is meant for transportation of goods. You can take the credit. Or FedEx, that courier company, purchase an aircraft for transportation of goods. They can take the credit. Now the third block to credit. Third block to credit is very interesting. Market as important. You have to concentrate to understand this. Section 17(5) AB, general insurance, servicing and repair and maintenance of motor vehicle, vessel or aircraft for which ITC is not allowed as per clause A or AA. What is it saying? If you don't get ITC on some motor vehicle or vessel or aircraft, what will also not be available as ITC? Any expenses you spend on general insurance, servicing, repair and maintenance. I'll give you a very simple example. On my friend, he got a Mercedes. So he's running business. So he called me up and said, I'm buying a Mercedes. So he takes GST advices from me. So he calls me up and says, like, I'm taking a Mercedes. Can I take ITC on purchase of this Mercedes? I said, no, because that's a motor vehicle meant for transportation of passengers. Seating capacity is 5. So it's a block to credit. So I explained him concept of 17(5)(a). So he said, okay, fine. No credit. He has spent like, lakhs and lakhs of rupees, no credit. He was very sad, but it's okay. Now he calls me up another day and says, Lijil, now my insurance. He asked me, like, how much is the insurance you pay for your car? He said, no, for my car, I pay like 30,000 plus GST. He says he's paying 1 lakh plus GST. So 18,000 is his GST paid on taking insurance on the Mercedes. So he asked me, like, no, okay, you told me that I can't take credit on GST paid on purchase of the Mercedes-Benz. That's okay. What about this GST paid on the insurance on this particular Mercedes-Benz? Can you take the credit on that? That 18,000, can you take it as ITC? No, because if the motor vehicle is blocked, insurance charges, service, repair and maintenance also blocked. Understanding? Say our friend crashed the Mercedes-Benz and the Nokia incurs 5 lakh plus 90,000 on repair of this Mercedes-Benz. Can Nokia take the credit of this? The answer is no, because Mercedes-Benz is a block to credit. So similarly, their repair and maintenance also will be a block to credit. Now, what is the exceptions? There are 3 exceptions. 1, if the above service is taken on motor vehicle, vessel or aircraft on which ITC is allowed, then that's a block. That's allowed as ITC. Second, for general insurance company for motor vehicle, vessel or aircraft insured by them. Third, for manufacturers of such motor vehicle, vessel or aircraft, these 3 cases they can take credit. First, what is that they're saying? The above service is taken on motor vehicle, vessel or aircraft on which ITC is allowed. Say, Nokia has taken insurance on the truck they purchased and they have paid GST on that. Can Nokia take the credit? Can Nokia take the credit? Insurance on the truck. Yes, because the truck, when they purchase, is it a block to credit? No, because it's meant for transportation of goods. So for whatever vehicle is not a block to credit when you purchase, on those vehicle, it is not a block to credit. It is not a block to credit when you are, it's not a block to credit when you are taking an insurance. There are three things: insurance, repair and maintenance, and service. Second, for an insurance company, it's not a block to credit. We'll give an example. Say, I'm pretty sure you'd have heard of this name, Echo Insurance. Okay. So Echo Insurance, general insurance company selling car insurance to people. So their outward supply is what? Insurance service. What is that they'll collect? When an insurance company is selling insurance, what is it they'll collect? Insurance premium. So this Echo Insurance company has collected insurance premium. On this insurance premium, whether GST is applicable? Yes. So that's the Echo Insurance company's outward tax liability. What are these expenses for Echo Insurance company? They would be paying for all these crashes, repair and maintenance. So on those repair and maintenance of motor vehicle, can Echo Insurance company take the credit? The answer is yes. For a general insurance company, for those vehicles they gave the insurance, whatever repair and maintenance, they have paid GST, they can take it as ITC. This is another exception. Understanding? Is it clear? Can I have a quick yes? Next, suppose Maruti is a manufacturer. Okay. Maruti has manufactured 400 vehicles per day. All these vehicles, where are they? In the yard. In their backyard, they have kept all these vehicles which are manufactured and out of the factory. Now, because it's kept outside, there are a lot of dust on this particular vehicle. So what they did, they asked a company to do the servicing on this particular vehicle till it is dispatched. Now, can this Maruti manufacturing unit take the credit on servicing of this car? Their inward supply is what? Servicing of car. Yes, because the exception, the third exception says what? For manufacturers of such motor vehicle, vessel or aircraft, on these services, they can take credit. There are the three exceptions we have. Okay, so the first chart is over. Now the second chart. It's very easy to learn the second chart. Second chart has 9 activities which are blocked. Okay, 9 type of inward supplies are blocked. We will learn first 7, the next 2. Okay. First one. Food and beverage is a block to credit. Second, outdoor catering is a block to credit. Third, beauty treatment is a block to credit. Fourth, health service is a block to credit. Fifth, cosmetic plastic surgery is a block to credit. Sixth, leasing, hiring and renting of motor vehicle, vessel or aircraft for which ITC is not allowed is a block to credit. Then seventh one is life insurance and health insurance is a block to credit. But there are 2 common exceptions to all of these 7 items, which are they? One, inward supply of above goods and or service is used by a registered person to provide outward supply of the same category of supply or as an element of composite or mixed supply. Then, the above goods or service is provided by employer to employee as a statutory obligation. Now, let's look at each one of it and try to understand. Same. Our friend Ram has started a chartered accountancy firm. After qualifying, he started a chartered accountancy firm. Now, first year of his anniversary, he takes all the employees for having food as a good measure. Now, he spends 10,000 rupees for the anniversary expenses plus GST. 5% taxes he'll pay when he's incurring restaurant expenses. So 10,500 he paid for anniversary expenses for his firm. Now, where it is accounted as in staff welfare expenses in Ram's, chartered accountancy firm's books of accounts. So far, are you understanding the example? Ram is taking all the employees for having food outside. They all had food accounted in the books of accounts. Now, 500 rupees is GST on the food and beverage. Can Ram and Company, okay, which is the chartered accountancy firm, take the credit on this GST paid on food? No, because you think about it. If I allow people to take credit on whatever restaurant expenses they have, if they take it in the businesses, nobody in India will have food for their personal purpose. Everybody business. Whatever food, breakfast, lunch, and dinner only accounted in my books. Take credit. This is what will happen. So they said it's a block to credit, food and beverage. Second year anniversary, Ram and company understood taking people outside is a bad idea because so much of expenses people are having. People are eating really nice. So Ram and company decides that instead of taking people outside, he'll call a caterer. Okay, he'll call an outdoor catering guy. He will cook it and serve it in the backyard of his firm itself. So now food and beverage is served by an outdoor caterer. So he pays 50,000 rupees to this outdoor catering guy, plus GST of 5,000. Can he take the credit? He's also accounting that in his books of account. Can he take the credit? No, because outdoor catering is a block to credit. Now, Ram and company, the proprietor Ram says that, okay, for to get more business, I need to present myself well. So Mr. Ram goes into a beauty parlor, get a facial done for him, and books it in his books of account saying business development expense. So he spent 10,000 rupees on his beauty. Can he take ITC of GST paid on his beauty treatment? No, that's so again a personal expenses cannot be treated as business. So they said it's a block to credit. Beauty treatment, health service is a block to credit. He went to the extreme saying that I'll get a plastic surgery to look well. And books that plastic surgery is business development expense in his books. Can he take the credit of that? Plastic surgeries are taxable, okay? In healthcare, plastic surgeries for beautification is taxable. Can he take the credit of that? No. So let's look at the first 5 block to credit: food and beverage, outdoor catering, beauty treatment, health services, cosmetic plastic surgery. All of them are blocked. You can't take any ITC. Next. Leasing, hiring, and renting of motor vehicle, vessel, or aircraft for which ITC is not allowed. You remember, Nokia company appointed our chartered accountant as a CFO. And what was his condition for joining? He said, I need a Mercedes-Benz. Nokia is very smart. Instead of buying Mercedes-Benz, Nokia takes Mercedes-Benz on lease. Monthly, they'll pay 1 lakh rupees on lease. Because if the CFO leaves after 1 year, why they need this kind of an expense? So they took it on lease. They paid GST on leasing of this Mercedes-Benz, 18,000 per month. Can they take the ITC of that? Can they take ITC of that? That's the answer. Leasing of this Mercedes-Benz. They said leasing, hiring, and renting of motor vehicle, vessel, or aircraft. When you purchase, there is no ITC. Then when you take it on lease also, there is no ITC on the lease. Otherwise, people will plan it like that. Then, life insurance and health insurance is again a block to credit. To give you an example, after COVID-19, Ram and company decides, the chartered accountancy firm, they decide for every employee working in Ram and company will incur the expenses to take care life insurance and health insurance for them. So in 1 month, they are paying 10,000 rupees as premium for taking insurance of their employee. On this premium, they would have paid what also? They would have paid GST as well. Now, Raman company accounted this as staff welfare expenses. Okay, payroll expense only. Now, can Raman company take the credit on the GST paid on premium for their employees, life insurance, health insurance premium? They said no. Health insurance, life insurance, and all is personal expenses of employees. Just because the employer paid it, no credit. But there are 2 exceptions. So all these 7 items, there are 2 exceptions to it. We will look at one exception with an example. Have you guys watched this movie, Ustad Hotel? I think pretty sure some of you guys would have watched the movie Ustad Hotel, like a beautiful Malayalam movie. You watch it after your exams, okay, if you have not watched it. So the context of this movie is very simple. This is small but very authentic, passionate hotelier in Calicut. Okay, and he runs a hotel called Ustad Hotel. Because he's not very business minded, he's not making a lot of profits, but he makes the He makes great food. So what he does, he makes great food. He does not know how to market. So this five-star hotel in Calicut identifies his potential. So this five-star hotel in Calicut called as Beach Bay International. That's the hotel on the right side. That hotel purchases the biryani from this Ustad hotel for a price of 100 plus GST. And they sell it to the customers in Calicut for 500 rupees plus GST of 25. Now, everybody in Calicut thinks that the best biryani is available at Beach Bay International. It's okay to pay 500 rupees. But it's actually purchased from Ustad Hotel. This is the storyline. Now, my question is, suppose Ustad Hotel and Beach Bay International, both of them are registered. I want you to give me an understanding on how GST mechanism would work here. Now, what is the inward supply of Beach Bay International here? They are making inward supply of biryani to make outward supply of biryani. Can Beach Bay International take the credit on 5 rupees GST paid on purchase of biryani from Ustad Hotel? Because they are taking inward supply of food and beverage. Can Beach Bay International take the credit? The answer is yes. Why? How can Beach Bay International take the credit? Because they are making inward supply of biryani to consume biryani or to provide outward supply of the same. They are making outward supply of the same. Yeah. So the exception says what? Look at the first exception. Inward supply of above goods and or service used by a registered person to provide outward supply of same category or as an element of composite mixed supply. How can it be an element of composite mixed supply? Think about the same example. Now, the Beach Bay International purchases a biryani and gives it to everybody who's staying in the hotel, which means their accommodation service has biryani also included in it. So it's a composite supply of food and accommodation. Then also Beach Bay International can take the credit of it because they have made an inward supply to provide outward supply as such or as a part of a composite supply or mixed supply. Okay. The second case, if the above services, all 7 of them, okay, if the above service is provided as a part of statutory obligation. Now, the government in some cases, statute, legally, the government in some cases comes and says, hey, employer, you have to provide these to employees, mandatory. Now, when the employer comes and says that it has to be mandatorily providing some of them to employee, some of these services, like so the employer comes and says you have to give mandatorily food to the employee. The employer says you have to give compulsorily insurance to the employees. Will it be an additional cost for the employer? Wouldn't it be an additional cost? Yes. Now, together with that additional cost comes a benefit. What is that benefit? The government says that the employer, when is incurring these expenses, because it's a statutory obligation, the employer can take ITC also. So in the examination question, if any of these services comes as a statutory obligation, you say that ITC is allowed. To give you a very simple, straightforward example, there's an act called Shops and Establishment Act in Karnataka, which says every employee who's working in a company in a night shift, if it's a women employee, the employer has to give them pick-up and drop services. So the employee is working in BPO services of Infosys in Karnataka. Now, Infosys, what they do, they take a vehicle on hire. They have leased out a vehicle to give the women employee pick-up and drop services. Because they have done this pick-up and drop leasing for this particular employees, they are incurring 50,000 plus 9,000 GST on a monthly basis. Now, why Infosys is giving this pick-up and drop? Because it's a statutory obligation. But what kind of inward supply are they taking? Leasing of motor vehicle, which is less than 13%. So can Infosys take the credit on leasing of this motor vehicle? Yes, because it is provided by the employer Infosys as a statutory obligation, with an exception. So Infosys will be allowed to take credit. So in any question, if it comes as a statutory obligation, you understand, you can take the ITC. Now in clause B, the next two items is membership in a club or health or fitness center. Employee travel benefits on vacation such as leave concession or hometown concession. Now think, the employer, Ernst & Young, says that for every employee in Ernst & Young, we will give you a gym membership. Now, any employee takes, say 100 employees from Ernst & Young takes some gym membership, pays 50,000 plus GST. Who will make this payment? Ernst & Young makes this payment. Now, Ernst & Young wants to take credit on the GST paid on this club membership. Can Ernst & Young do it? No. Only when it is a statutory obligation. What's the exception? ITC is allowed on this club membership when it is provided by Ernst & Young to the employee as a part of statutory obligation in that particular state or a country. Then, employee travel benefits on vacation such as leave travel concession or hometown concession. So employee travel benefits on vacation such as leave travel concession or hometown concession. Say the employer says that the employee can take a vacation and employer will pay the money. Say the bank I worked in had this kind of an offer. So they used to give us, I worked in a bank earlier. So that bank used to give us, packages to Singapore. Like say, as an employee, I took packages to Singapore and I paid for the package 50,000 plus 5,000 GST. Now, who paid this 55,000? The employer, the bank paid. Now, can the bank take 5,000 credit on this travel benefits enjoyed by the employee? The answer is no. That's also a blocked credit. Understanding, everyone? Let me ask you a question to ensure that we have, you're understanding whatever concept we have discussed. Now, the question says, advice regarding availability of ITC under CGST Act 2017 in the following independent cases. Number one, AMT Company Limited purchased a minibus having seating capacity of 16% for transportation of its employees from their residence to office and back. Can they take credit? Yes. Why? Because this is a motor vehicle meant for transportation of passengers. Seating capacity is 16. When will be blocked? It's less than 13, including driver. So this is not blocked. You can take ITC. Question number 2 here. Bangur Ceramics Limited, a manufacturing company, purchased 2 trucks for transportation of its finished goods from factory to dealers located in various locations within the country. They purchased 2 trucks for transportation of finished goods. Can they take credit? Yes, because it's meant for transportation of goods. Only passenger with less than 13 is blocked. Third one, Hans Premium, dealing in luxury cars in Chanakapuri, Delhi, purchased 5 Skoda VRS cars for sale to customers. Can Hans Premium take the credit on purchase of cars? Yes, because Hans Premium is a dealer. It's an exception because they've made inward supply for outward supply of the same. Fourth question. Sun and Moon Packers Private Limited availed outdoor catering services to run canteen in its factory. But Factories Act 1948 requires the company to set up canteen in its factory. Can they take the credit? Yes, because Sun and Moon Packers did take the outdoor catering services to meet a statutory obligation. So that is an exception. They can take credit on this outdoor catering service as well. So all the cases is an exception that they can take the credit. Are you guys with me? Okay. I know that the time is getting late. So I'll close with this. I'll take the rest of the concepts in this chapter together with registration in the next session. So I'll do one thing. I'll show you the method in which you can reach out. So what you should do is that now you take some 30 minutes today to go ahead and then try to go through these topics. So I've now started a separate WhatsApp to answer your queries. So if you have any doubts and everything, you can text me on WhatsApp here. This is not my office number. This is only for academics. So any queries, anything you want to reach out, if you ping me on this number, I will definitely save your number and then try to answer the queries within a daytime. You can send out so that I can consolidate all my doubts. Now I get a lot of doubts on Instagram, a lot of doubts on my official WhatsApp number and things like that. So this is where I would prefer you to save and then, answer. You can ask, you can forward this number to your friends also so that they can also reach out to me, okay, on any queries that you have. So the ideal method is you take a photo of your query, do a voice note if it's required to understand that much, and I will look at that and then answer you. Might take some time, but then yeah, now I'm trying to do it quicker. Okay, so we're also doing a live on the 7th night to do a complete recap of the whole GST provision, which will also be free. So be watchful on the YouTube channel. I will upload this video tonight and I will make it available by tomorrow. All of your friends, if they want to watch a quick recap of ITC provision on these two, you can share with them. So I'm still pretty happy that I've extended and took an extra session and all of you guys are still available and listening. Please go through the question bank that I've given you. If you have any queries, please reach out on this number and then ask me. I'll be able to answer those. Okay, so yeah, 7th November, correct. So that's like 6th you have an exam, 7th and 8th is a holiday and 9th is an exam. So 7th evening, I'll do a quick recap of the whole topic. So that you get a complete recap within like 5-6 hours in my YouTube channel. So that's the plan. Okay, so we have few batches coming in between for workouts and stuff like that, which you can personally reach out to me to understand. So that's it for today, guys. Thank you so much for your patient listening throughout. I know it's online and it's a lot of dragging for the evening, but thank you for your patient listening. I'll see you tomorrow. Our tomorrow session is at 6 o'clock. So it's a slight change in time. We're doing it at 6 because I have something coming up in the evening. So I'll wind up like 8:30, depending upon how much we finish. So we'll finish ITC and registration. Registration also has few amendments, or we'll try to do questions as well. Okay. Thank you so much. If anybody does not have the materials, please reach out to me. I'll give you. Okay. Thank you. Thank you, Leo, for enjoying the classes. Thank you, everyone.